You're welcome back. This is Business Morning coming to you from Channels Television. I am Bolaji Akinwale. We've been talking about non-interest banking in Nigeria, and our guest has been Masud Balogun, the General Counsel at Lotus Capital, and Bashir Oshodi, who is a member of the Nigeria Islamic Finance Working Group. Thank you, gentlemen, for still sticking around with us on the show. Before we proceed, there's a tweet that just came in, and it's from Sani. He said that non-interest finance to compete favorably with the conventional finance product. I think what he's trying to ask is that how do you think that it can compete favorably with conventional banking products, since we know that we're all used to the modern banking style, but if you now talk about non-interest finance, how does it compete? Do you think it has a space to compete? Let me ask Masud this question.
Of course, it does have a space to compete favorably with the conventional finance products. But what we must bear in mind is that non-interest financial products is of recent origin. I mean, it's not as developed and sophisticated like the conventional financing. So particularly in Nigeria, for example, I mean, there is a report that non-interest financial product, the global asset is about less than $2 trillion US, and that is just about less than 1% of the global asset. So in that regard, there is the conventional market is larger than the Islamic finance or non-interest market, but then it can compete favorably with the conventional market. We've seen in various jurisdictions like the UK, the US, Germany, and North Africa and the South Asian countries offering non-interest finance products. A particular interesting case is the case of Malaysia, where the non-interest finance market and the conventional market exist side by side. Over the growth of the non-interest financial market in Malaysia over the last 5 years has been tremendous. As we speak, it has surpassed the conventional market. So the same for very recently, the UK government issued a 200 million pound sukuk, which is an Islamic bond, if you like, and it was oversubscribed by more than 100%. They came to the market to raise 200 million pounds, and they got subscription of over 2 billion pounds. So that's to tell you that clearly there is a market for this product, and they can compete favorably with the conventional market. And like I said earlier, because it's of recent origin, so it takes time for it to develop. But the growth rate has been tremendous. It's been estimated that the non-interest market in the last 5 years has grown at the rate of 17% per annum, and is estimated to grow at the rate of 19 to 20% per annum over the next 5 years or so. So it's clearly it can compete with the conventional market.
All right, let me come to Bashir. The IMF actually launched consultations with its external advisory group on Islamic finance, and part of the discussions in that meeting was to include the value proposition of Islamic finance, the level playing field between Islamic and conventional finance, impediments to growth in profit and loss sharing financing, and the potential of the industry in fostering access to finance, notably for small and medium-sized enterprises. Now, what does all of this say about non-interest banking and what it has to offer?
The industry is just growing, right? I'm going to talk about some of these things and how it affects the industry, the growth of the industry in Nigeria, right? We'll talk about the sukuk and the fact that we need PenCom to come in to acknowledge, sukuks, as proper investments.
Are they showing any interest in that?
We're working on that.
Okay.
Now, on the other hand, the industry does not have liquidity instruments as such. So we don't have our own T-bills. right? We don't have short-term liquidity instruments. And without that, it means that you collect a lot of deposit from customers, you don't have anywhere to put them, except you create risk assets or financing. If you not create risk assets, the money is just going to be doing nothing, right? So we need the CBN to come up with liquidity instruments that the industry can use. It's going to help the industry grow very quickly. That's on one hand. On the other hand, you've got a lot of CBN funds. You've got the CACS fund for agric, you've got that of mortgage, you've got SME funding, the 230 billion was set aside recently. Islamic finance cannot access these funds because they're interest-based, right? Okay. So it means they're disadvantaged in that area. Of course, apart from the fact that they're interest-based, the interest on them is lower than, single digit basically, less than 10%. It means that no-interest banks can only create, the risk asset they're going to create is going to be a little more expensive. If they have to create mortgages, they have to compete with the funds set aside for mortgages and the CACS, for agric and for SME. So it means that CBN should also recognize or work out a way, some kind of muraba or markup approach that can accommodate the concept of Islamic finance. And that's the second thing. These two things, liquidity instruments and this fund, very, very important for the industry to grow. We've also got challenges regards, should I say, knowledge or skills, capacity development in this area. That we need to improve on that. If we've got these things in place, it's going to help the industry to grow very quickly. For like I said, it's not like we're just sitting back and watching. A lot of work is being a lot of effort is being made towards achieving this. I believe that as a matter of time, we're going to get there. Yeah. Okay,
I'm afraid that's all we can take at this point on Business Morning. Thank you, gentlemen, for coming. Yeah, we do appreciate it. Bashir Oshodi is a member of the Nigeria Islamic Finance Working Group, and Masood Balogun is the General Counsel at Lotus Capital. They've been talking about non-interest banking in Nigeria. How have we gone in that respect, and what are the benefits and opportunities in that model of banking, and how can it help to grow the economy in general? And that's it here on Business Morning. I want to thank everyone out there for spending time with us on the show. We do appreciate it as well. Thank you for watching. I am Bolaji Akinwale.